So if you actually wanted to accumulate wealth, the number one thing you got to do is you have to acquire high quality assets that will not be impaired.
Sure.
The number two thing you have to do is you have to have a relationship with banks that will advance you money, cash, fiat, euros, dollars that you have to spend against those assets. That's the second thing. But the first thing, well, now let's come back to Bitcoin. Well, what's the highest quality asset on Earth? What's the best property you could possibly have? A city block in Manhattan? Not anymore.
Right.
It used to be a city block in Manhattan when everybody in the world went to New York City. But you can't move a city block. What if I gave you all of Park Avenue in cyberspace, and I told you that 1 billion people are going to live there one day, and they'll live there for 1,000 years? What if 10 billion people want to live in cyberspace for 1,000 years, and you could actually own 1% of the city, or 0.1% of the city? Why would you ever sell it?
Right.
Right. I mean, the point is, they're not making any more of it. Bitcoin is Manhattan in cyberspace. It's 21 million city blocks. You can buy a block. Okay, it's better than buying all of LA, because you can't move LA out of California. You can't move it out of the US. It's better than buying 10% of Apple, because Apple might print twice as many shares and then you only have 5% of Apple. It's better than owning a bunch of gold, because gold miners are going to produce twice as much gold.
Yep.
Okay, it's better than owning bonds and cash. So tell me, what on earth is better than owning the Jets or a football team? People might not be watching football in 1,000 years. Right. By the way, there's nobody in the stands this year watching football, right?
Yep.
So find an asset. It's probably better than owning the Mona Lisa or owning a Michelangelo or something like that. I mean, although those are scarce.
Right, it's scarce.
You can't be guaranteed that everybody's going to want to have classical art. But will everybody want money? Monetary energy? Like, monetary energy is the ultimate property. I have pure, encrypted, tokenized monetary energy, and I can own 1/21 millionth of all the monetary energy there's ever going to be for people on the monetary network, which is the dominant monetary network. So you buy fill in the number, you buy it and it's going up 100% a year, right? Mm-hmm. You have $1 million and you sell it, so you have $500,000 you can spend, or you don't sell it and it goes to 2 million, 4 million, 8 million, 16 million, 32 million, 64 million, 128 million, 256 million, 512 million, a billion, right? Okay, so a millionaire becomes a billionaire by not selling over 10 years. And let's say you wanted to spend 500,000 a year, borrow 500,000 a year, and after 10 years, you will owe 5 million out of $1 billion. Your debt to equity, including interest, is less than 1%. 1% of your Bitcoin would be debt. Now you tell me, you think it's a wise thing to sell the $1 million? It's going to cost you $999 million to sell the million. You think it's less risky? I mean, and I think the answer is, I think people, they're not realizing that they can borrow against it. They should go and, the single most important thing you can do is develop relationships with bankers that will loan you money against your assets. And then, in terms of, Tony, like what would I borrow against? Well, first you borrow against fixed assets, like borrow against your house, because it's not marked to market. It's not going to trade down by 50% in a morning, right? Mm-hmm. So I joke, mortgage your house, buy Bitcoin. But the truth is, before I sold Bitcoin, I would mortgage my house. Sure. Because I can get a 30-year mortgage with a fixed interest rate, and the house is probably going to go up in value over the 30 years because the banker's going to print more money. So why don't you borrow against a fixed asset? If I can't borrow against a house, I borrow against my car. I started MicroStrategy. I took a furniture loan. I borrowed money for furniture. I didn't buy the furniture, by the way. It was just an excuse to get an unsecured loan. But you borrow against something like that is not going to trade down rapidly. Like, I am not, for example, I would not tell anybody go buy Bitcoin on 10-to-1 margin. Like that's stupid. Like, don't go buy $1 million of Bitcoin with 100,000 of collateral, because if it trades down 10%, you're going to get force liquidated and wiped out and lose your 100,000. I would say a better idea would be buy 100,000 of Bitcoin with 100,000 in collateral. And when it goes up by a factor of 3 or 4, you can borrow 50,000 against it. Your debt to equity ratio would be 20%. If it doubles the next year, your debt to equity ratio will be 10%. If it doubles again, your debt to equity ratio will be 5%. If it doesn't go up by a factor of 100%, if it goes up by 10%, as long as it's appreciating faster than your rate of interest, and interest rates are low, it's kind of a non-issue. And
sure.
And you have to adjust your expenditures, right, to keep them in line. So common sense is, keep your debt to equity ratio at 10, 20, 30% of your assets, and then hold on to high quality assets. There is no one that ever got rich, in my opinion, nearly no one, that didn't buy an asset
right,
and let it appreciate tax-free over time. It's
sure,
the taxes that kill you, right? The capital gain tax, the income tax, etc. And you really, when you borrow against assets, you're actually living on liability. So
right,
instead of making $500,000 a year and then paying $250,000 a year in taxes, wouldn't it be a lot smarter to borrow $250,000 a year and let the money appreciate tax-free for the next 20 years of your life? That way you pay no tax, and you've still got an asset that's working for you. So you win both ways. You just have to manage your debt exposure, and you have to be intelligent about, are you marking the asset to market? And if you're marking it to market, you need to be very conservative about your debt to equity ratio, as opposed to, are you taking an asset against a loan against a fixed asset, which isn't going to be marked to market. It's just a term loan.
So Michael, I know you have a few more minutes because you mentioned you had to hop off at a certain time. 2 quick questions before we wrap it up.
Yeah.
Is MicroStrategy planning to get into any Bitcoin mining? We're seeing a Bitcoin mining movement in the United States. Anything there that you're planning to do?
I think it's important that the Bitcoin mining industry grow everywhere in the world, and especially in the U.S. I'm a big fan of that, and I like it. I think that the people that should be in Bitcoin mining, they need to have proprietary assets, either in energy. You need to have access to cheap energy,
right,
over a long time, or they need to have a capital structure optimized. If you're a publicly traded company that's got shareholders that want to be in the mining business, like say Marathon, it makes sense for them because that's what they are, right? Their shareholders signed up for that, and they've got a capital structure for that. So if you have a public company that's optimized for that, that's good. And then if you have access to, Intel ought to get into it, right? If you can manufacture semiconductors, and you can, or if you've got data centers like Amazon, right? The ideal thing would be an Intel or an Amazon, someone that's actually got serious data center structures because they have strategic assets there. MicroStrategy really isn't strategically in the data center business, the chip business, or the energy business. So it's not really a good fit for us, but it would be a good fit for one of those types of companies.